What's up, guys? It's your Money Cat. I hope you guys had a good weekend, getting ready for another exciting week in the stock market. Today, I thought we could talk about something a little bit different. Usually, we talk about short-term trade ideas, swing trade ideas, but today we're going to talk about long-term perspective. I thought it was a good timing to talk about long-term perspective because we're coming up at the end of the year and we had a heck of a run so far, especially if you're able to get in during March. So I think it might be a good time to think about perhaps rebalancing your portfolio, and I'll talk about rebalancing in another video, so make sure you subscribe to the channel and be notified of future videos. Today we're going to talk about FAANG stocks. Why? Because these companies have superb balance sheet financial picture, so there's absolutely no need to worry about those. And number two, they are leaders in their respective fields. Not only leaders, but a dominating leaders. So what does that mean? Being a dominant leader means that in your field, you are so powerful that no one else would even think about challenging you. So it cements your seat as number one in your field even more. It also means that they're likely the leading innovators in their field, and new things, the hot stuff, usually gets the money in the stock market. We live in a world where the rich get richer, and it happens across everywhere. It happens individually, happens in the business world, happens in companies, it happens in the stock market as well. Let's say you invested $10,000 and you gained 20%, which is really good. That's $2,000. However, let's say another person made the exact same investment or trades, but they just had deeper pockets, so they were able to invest $1 million. That 20% now turns into $200,000. So same exact trades, except that person got $200,000 and you got $2,000. It's just the world we live in. And the same thing applies to these FAANG stocks. Another reason why I love these companies is they make up a big portion of the market and they're more closely tied towards the actual economy as well. So what that means is, let's say these companies have a down year. That likely means that the entire market probably had a down year. Yes, you'll find a stock or two that did the opposite, but chances are if these companies are down, then the entire sector, maybe the entire market, will likely have a down year as well. So to me, the risk is minimal because if you didn't invest in these companies, you likely would have spent money in other companies. So without further ado, we're going to talk about them in order of my preference. So number one is Amazon. Why do I love Amazon the most? It's because they are everywhere, literally. They are omnipresent. It seems like there's no sector or no field that they haven't touched on or they're interested in touching. And usually this would mean that the company is spreading themselves out too thin. But here's the kicker. Amazon actually has the money and financial backing to do all this and yet have a stellar financial picture. And I dare say if Amazon has a crash, most likely the entire market will also have a crash. That's how much effect and impact Amazon has on the stock market because it is so big. So where would be a good entry point for Amazon? Well, if you ask me, I think it'd be a good idea, especially if you're rebalancing your portfolio, to continuously buy Amazon as it keeps falling down. As you can see here, we're in a little bit of downward trend, continuously making lower highs. Now, I don't think this will continue on much longer. We are in a very strong horizontal channel marked by these horizontal lines. So if price for Amazon ever reaches towards the $3,000 mark or a little bit below around this area, then that is, to me, a green light to buy. I think at that point, it's worth the risk to enter at that level because it has proven to be such a strong support throughout this horizontal channel. And that is about 17% off of all-time high. So if I just flat asked you, would you buy Amazon when it's 17% off all-time high? I think most people will say yes. And long term, I'm certain that even if it dips a little bit below that support level, eventually it will be able to come back. Furthermore, if we do reach the support level around $29.50, then there's the 180-day moving average on 1 year daily time frame chart that is coming up right here. So if we do fall that much, by the time we reach that price point, this line would have caught up and provide another layer of support, making it even stronger than before. Though I'm not sure if we will reach that point. If we come back to the 180 days 4-hour time frame chart, it looks like on the MACD we are about to cross over into positive momentum, meaning that we could go up and break above this downward trend line. And because we can reverse at any point, that's why I say continuously buy at increments as Amazon continues to go down. In conclusion, if Amazon continues to trade a little bit lower, according to this downward trend line that we're following right now, around 29.50, that is the big support level where 180-day moving average is also coming up from the bottom. I would look to enter at that point if we do indeed touch that point. My second favorite FAANG stock is Apple for similar reasons. They are super dominant in their own field. Not only that, they've definitely began to branch out, kind of like Amazon, although not quite at Amazon's level. So they're being multifaceted, not just a phone company. Let me ask you a simple question. Can you imagine a world where Apple does not exist? If you answered no, that just tells you how much impact Apple has in our daily lives, and that's what you want to see in companies that you are investing long term. I have covered Apple in previous videos, so we're going to do a little bit of chart cleanup together. So Apple was in a little bit of downward trend like Amazon is now, but it was able to break above it. So we are going to get rid of this line. We don't need that anymore. Currently, I see two upward trend lines that Apple is tracking with. The first one is this line right here, which is shorter term. The second one is this line, which began all the way back from, when was this? This was July 24th or so. So what I do in this situation with multiple trend lines is with the shorter term, if you are trading short term, that's the line I follow for those. And then the number two would be a little bit longer term, maybe like swing trades or even long term. That's what I follow. Now, if we look really widely, like Amazon, Apple has been also in this horizontal channel for a long time. So the number three trend would be this horizontal channel right here, marked by this line and this line. That is the ultimate long-term trend that we're tracking. So the buying opportunity for Apple will be a little bit different than Amazon because Apple is currently in an uptrend. I think it's still a good idea to buy at an increments, but my first increment would be when it's close to the first short-term upward trend line. You want to catch it off the bounce. And then your second increment would be if this breaks down, then the second one would be off of the second longer-term upward trend line. And finally, number three would be around the $110 mark, as that has been where the support has been holding. Are we ever going to see $110 again? At least right now, it doesn't seem likely as we are tracking in an upward trend. However, if it does reach $110, it's a similar story as Amazon. First, you have this horizontal support line at 110. Secondly, you see this green line on 1 year daily chart time frame, and that is the 180 days moving average. So likely by the time price dips, if it does, this line would have caught up, providing another layer of support for Apple stock. The third stock on this list is Facebook, and it was a very close one with Google. For me, Facebook takes the cake because Google just moves so darn slowly. And I know I say we're covering long-term perspective, but my goodness, Google moves like it moves through a thick layer of molasses. It is so boring, and just personally, I just can't take that. So that's why Facebook takes the cake at number 3. However, it also sits at number 3 because it has been very volatile. And you can see all these peaks and valleys that ultimately leads to nowhere. It looks like we're coming to a wedge pattern marked by lower highs and higher lows. it looks like the resolution of this wedge pattern will be somewhere around here, which is about 278, maybe 280. At the end of this resolution for this wedge pattern, if it breaks down, then I think the next support level will be around 260 or so. And then the one after that would be this bottom of this horizontal channel, which is at around 246, 245. If it breaks to the upside of this wedge pattern, then the next stop likely would be the all-time high, which will give you about nice 12% gain from where it's at right now. Just be ready for a roller coaster, as it has proven in the previous couple months. It is just all over the place. So if you have good beliefs about Facebook that it'll break to the upside at the end of this wedge pattern, I would look to enter position on the bottom side of this wedge. If not, if you wait and it breaks below the wedge pattern, then perhaps a little bit here at 260, because that is the next local support level. And then ultimately at 245 or so, if it falls below this support level, as that is the macro level support level right now. Number 4 on this list, more like 3B, is Google or Alphabet. I personally don't track Google that much for the reason I already said. It just moves too slow for me. So we're going to be pretty brief on Google. Currently, Google is only about 3.5% off all-time high. So it is the closest to all-time high among the 5 stocks that we're talking about today. So if you look at it that way, not a lot of room to catch up to all-time high. However, looking at the chart, it has been a positive trend, although slow moving. If you look at the RSI, it bounced off from being oversold and is tracking upwards. And if you look at the MACD as well, it looks like it is preparing for a possible crossover into a positive momentum. And if you look at the 180-day moving average line, it's tracking pretty closely with the current price. So perhaps Google will channel horizontally a little bit, and then once it meets with that 180-day moving average, it'll bounce off of it and continue going higher. If you're looking to invest in Google, you really have to be patient. As like I said, it moves like Titanic. If you just look at it for a second, it looks like it's not moving, but it is moving. So just be patient, be ready to wait. Finally, the last stock on this list, in order of my preference, is Netflix. I personally don't see Netflix as a stock to invest in long term because, yes, undoubtedly, they are still the leader among the streaming sector. However, I feel like their lead has gotten much narrower, and there are just way more competition that is growing compared to the 4 other stocks. Recently, Disney announced good news about their Disney Plus subscriber numbers. And even though technically, yes, people can subscribe to both Netflix and Disney Plus and many other streaming platforms or subscriptions, but the key difference between the streaming sector and the other sectors that other FAANG stocks are in is the limiting factor. The limiting factor for the streaming sector is time. And time is the most scarce resource out there. People only have 24 hours a day. Most of it's spent sleeping, most of it's spent working, takeout, eating, whatever, and you only have a certain number of hours per day to watch whatever you want. Now, there's a lot of competition for those few hours. You have Netflix here, Disney Plus, Hulu, all other streaming platforms, as well as YouTube, which is owned by Google. And I thank you for watching YouTube right now instead of Netflix. So for those reasons, I think this sector is probably the most saturated with the most number of strong competitors. So I just don't see Netflix as a good long-term investment. However, on the flip side, I think this is probably the best short-term trade idea among the 5 stocks that I'm mentioning today. So let's take a look at that instead. Recently, I released a video on Netflix and saying how it likely will break above this downward trend pattern. And it did, although pretty weakly. But it ultimately did, so we'll get rid of this. And as you can see on this 180 days 4-hour time frame chart, like many other FAANG names, we are tracking horizontally. Very, very strong horizontal channel for a couple months. And now we are tracking with this upward trend line. There will be a lot of ups and downs, but we are still making higher highs as well as higher lows, especially if we are able to bounce off of this past the 520 level. Then we would be continuously making higher highs and higher lows, which will signify that we are really indeed in an uptrend. In the short term, I actually do see Netflix reaching the top side of horizontal channel again, which will give you a good 12% gain. Why do I think that? Well, if we zoom into current run that we are on, if you look at the MACD, we actually are very close to crossing over into the positive territory. Not only that, if we switch over to 1-year daily time frame chart, the 180-day moving average, this green line, is actually following very close underneath to where the price was, especially around right here. And it's continuously kind of following it on the bottom side, providing the support that Netflix needs to continue its current upward trend. However, again, these are just my own personal short-term trade ideas for Netflix. Long-term, I just personally don't really believe Netflix has that much more room to grow, if at all. Always do your own research. Make sure you follow your own beliefs, as it is your money and only you are responsible for your own decisions. These are just my own personal opinions, my own personal thoughts. Let me know what you think about them in the comment section below. That is the best way to get other ideas and perhaps get different perspectives on looking at different stocks that you've already been looking at. With that said, this has been your Money Cat. Thank you so much for watching. I wish you the best of luck in the upcoming trading week, and I'll see you next time.